Hello traders, it's Samurai Trader here. In today's session I want to briefly cover trading floor pivots and when not to trade against floor pivots. I ran a Q&A session for members last week and I've received 10 to 15 emails just asking if I could give some more examples of floor pivot trades or the potential trades around the floor pivot areas. Now, floor pivots are of course applicable if you trade stocks, Forex or futures. Now in today's video I'm just going to look at a few trading opportunities on Forex and the futures market. Understanding the risk, I need to show this by law, so if you haven't read one of my risk disclaimers, please ensure you perhaps pause the video and read the disclaimer. Now everything I'm about to cover is covered comprehensively in the Day Traders Fast Track program, my training program. Please visit my website perhaps after you watch the recording, request my free ebook The Truth About Day Trading and further information about the Day Traders Fast Track program. So let's get straight into this because I want to just keep this under 10 minutes today. So there's lots of different types of pivots or floor pivots. You got the standard floor trader pivots, you got Woody's pivots, you got DeMark pivots, Fibonacci pivots, all sorts of open, high, low and close and different variations, so it can become confusing, but virtually every modern charting package has standard floor pivots in them. So that's what I want to really focus on in this session. So floor pivots are calculated in advance. So floor pivots are a really important level of support and resistance, and it's very important that you plot them on your charts. As you're about to see, when I head towards a floor pivot, I want to make sure if I'm about to enter into a trade that I've got room for my trade to move, because time and time again, not always but the majority of time, you'll get a bounce around the floor pivot area. So let's have a look at a couple of opportunities or a couple of examples from today, and I want to explain a couple of things which will really enhance your trading. Now if you don't have a pen and paper handy, you may want to write some of this down because it's very important, because it can dramatically improve the health of your trading account if you understand this. So first of all, it's Monday the 25th of the 7th 2016. So we're trading the Globex market here. So this is we're looking at an ES chart. This is a 233 tick chart. It is very early morning in the USA, Monday morning, and we're looking at a 233 volume chart here. Now this blue line you can see up here is one of the pivots. So you'll get different floor pivots plot automatically, depends on the charting package you've got, and as I mentioned, floor pivots can vary a little. So we can see a pivot down here and we can see our pivot here. So this is the open of the market this morning at 9 a.m. actually sorry 8 a.m. Monday morning Australian time. And of course for our standard members, you can see here we've had some T25 34B, you've got your T20 your T20-1 T25, so you've got your classic trading opportunities. But looking at our pivot bounces, we can see here that price has gone up and we've had a perfect pivot bounce here this morning. Now where I get really excited with pivot bounces, being the PB as I've marked it up, is when I have divergence. So we can see here we were within 2 ticks of bouncing on the pivot, we've come down, gone up, and we've had a perfect bounce, and we've actually got divergence on our platinum down here. So that was perfect. Now then if we go and look at our higher time frame, and let me just pull this over here for you. Let me just do one quick thing here. It's turned itself off, so let's just have a look at this here, and I'll just pull this down as well. Actually, let's expand it. So we can see on our higher time frame here that we also had a pivot bounce, well naturally because pivots are calculated the same, but I really love it when I see divergence on at least one of my time frames. So what we've got, this is our higher time frame, so this is a 700 share bar. We can see we've gone up, but what we've also got here is our T3 setup. So let's now go back to the heights to the entry chart. So we can see here we've had a T3. We've got price accelerating away from the trigger line. It's come back, bounced up, and then we had a perfect not only a great divergence trade here, but then we had a T20 straight after. So just a textbook perfect trade for us to take on our entry chart. But let's then see what happened later on in the day. So we've gone down here and look at this here. So further on, just very recently, of course, we've come down and you've had exactly the same setup on your higher time frame, but look at the acceleration once again away from the trigger line. Perfect pivot bounce. And if you looked at the higher time frame, you would have noticed also we had a nice T3 there as well. We can see then price accelerated again away from the trigger line with within one tick of a pivot bounce again, and then price dropped. So you can just see here, if you're a hunter or you're really focused or have what I call a sniper mentality looking for these, there's some great opportunities in trading. But likewise, where you've got to be very cautious, of course, around pivots is if you had have gone to enter a trade here, you would have seen you would have been stopped out. So this is where you always want to check out where your pivots are. So I've just ducked across now. We're going to have a look at the euro dollar. This is a 3 range, and so if we look at price action here, this is late last week, we can see we've come in, and you'll see this quite often. You'll punch through by 3 or 4 pips, then you've got your pivot bounce. And if we just go back a little further, whoops, just accelerate a bit too far back. Okay, you've got the pivot bounce, but look at this here. Gone up, you've punched through, now you've got a pivot bounce to the downside. Punched up, you bounce on the pivot to the downside again. Look at this again. We've come down, we've bounced on the pivot once again. So once again, that was the 3 range on the euro dollar. Now what we're looking at here is the ES 550 tick, and this is from Friday last week. We can see here we've punched through the pivot, but if we just go back a little, whoops, you've just got to really watch this. It can really bounce around when I play with this. Here we go. Okay, so we can see here we've gone up. We've got of course our classic 89B 34B. We go through, we come down, we bounce up, we get some nice divergence, we come down, we bounce on a pivot, and just look at this bouncing around. Now once again, where you've got to be cautious if you've got a trade entry at these sort of points, because you can see you just bounce straight off. It acts as very strong support. Now let's just scroll along here and see what happens. Okay, so we can see here we've come up, we've gone through, we're within one tick of the floor pivot again. We come down, we bounce off the floor pivot again. So you can see here when you've got the T1 plot, and this is for members particularly, you'd understand what the T1 is, and you get a close under the trigger line, under our blue line, of course, away we go. So they don't always make money, because what can happen is, of course, you can punch through, as you can see, but then what we've got at this pivot is a lovely double top, a T7 and divergence. So we really love it when we get those sorts of setups. But the point I wanted to make is on this recording is that you really need to learn and understand how floor pivots work, because you can see here we've gone through, we've got a 34B, and away we go. And I think we'll probably find we'll be bouncing on some pivots again. Okay, and now remembering this was last Friday, and you can see here we've gone up and it's acting as resistance. We bounce down, we bounce down, we bounce down. Now what we've got then here is, of course, is what we call a trading range. One thing to keep in mind is when you have a trading range, the longer the trading range, the larger it is, or over time or candles, usually the more violent the breakout and the more extended the move is. So let's just have a look here and see what happens. Keep going. Okay, all right, and guess what, it wasn't. All right, we had 4 or 5 what was that was good for when you finally got your breakout. And by the way, to confirm a breakout, what I look for is at least 2 candles closing above the point. And to be safe, if you take the first pullback, so when you get a breakout here, because if you go back and you can see here we've just bumbled around here. So how do you confirm the breakout? Well, what do you know, false breakouts are something that you see every day. You want to see at least two candles close above the breakout, and to be safe, wait for your first pullback, which is there. Okay, so there's your entry. And by the way, the reason we didn't get that extended move was we had that still would have been a nice 7-8 tick trade. It was Friday afternoon, so I was forgetting it was Friday. It was the end of a trading day, so we saw everyone leveling out their contracts. So the point is there is be very careful. It's an area you can be really badly chopped up on. So getting back to learning more about these, so members, this is for the Day Traders Fast Track members. I'm going to be covering this in more detail in a Q&A session I'm doing tomorrow. So it'll be Tuesday the 26th. I'm going to talk more about the pivot bounces. We've had a lot of questions asked about pivot bounces and support resistance. And of course, when you combine the support resistance areas off your anchor chart or off your higher time frames along with your floor pivots, you can really see how powerful these areas are for bounces and for trading. So traders, hopefully you've got some this has really got you thinking, and I'll see you on the next video. Thank you.